What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Oops, sorry, that was my chair. We are here to do a beautiful recap of Friday. We had a great trading day today, and I'm going to break it all down for you guys, give you the knowledge that you need to succeed. And specifically, I'm actually going to be talking about the option plays and looking at some of these reversal styles of trading. All right. So if you're ready, let's step into the war zone. So first and foremost, why don't you throw your name up on the screen? Let me show you some love, and then we'll step right into it. So Adriana, what's going on? Trading Wars Army Spy VIP, good to see you. I appreciate you. And what I want to do here, guys, is let's go ahead and draw the previous day's high and low as a reference, because that's what we always do in order to get a good idea of where we can see good trading opportunities. Oops, copied somebody's email there. Here we go. So here's the high, there's the low right there. Right there. Okay. And I'm going to go ahead here to the 3-minute chart, and then we're going to start. I'm going to show you guys the plan. Boom. All right. So the first thing that you guys want to do, who else we have in the building? Andy from Muskoka. What's going on, brother? Inez, what's going on? Good to see you. Anne from Texas, what's going on? Tom, Trading Wars Army Spy VIP, what's going on? Michael, Trading Wars Army, good to see you. Angie, what's going on? From HTX, I'm guessing that's Houston, Texas. I'm guessing. Motivate, brother, what's going on? Good to see you. All right, so let's do this. So the first thing that I have to do is I actually have to go to the trigger trade. So the first trade that we took today, guys, was a trigger. So the trigger trade, guys, what it is an automated trade that we put in the night before, and it already has a short and a long entry. Okay, so we already have that ready to go. So the first thing that filled today was actually the short. I'm going to show you 44644. All right, so I'm going to go ahead here. I'm going to put this in. I'm going to put this line here 44644. I'm going to put this in green. And here we go. All right. So we're all set up now. The chart is ready. So remember, if this green line breaks, that's when we go short. Okay. So first bar comes in, boom. So right away off the back, guys, we get filled short. So you could see here, we got filled. It pushed up a little bit and then turned. And what I was looking for here, guys, you'll see my live commentary in the morning, is filled immediately on the trigger short. The bot called it out as well. And I'm going to give this one a shot, looking for yesterday to load break here soon. So the whole point of this trade, right, is with this trigger, what I'm trying to see here is I'm trying to see we get filled, and I want to see yesterday's low break right away, right? I don't want to play no games. I need it to break. If it flips, then probably going to be a loser, okay? So here we go, guys. The red line is yesterday's low. Bam, we break through. Bam, then we reverse, okay? So we got a little bit of a, like if you're risking off of this bar, that's a nice 1-to-1, okay? So that's pretty decent. That wasn't, the best of plays, but it was still something to start the day off over there, guys. So I was able to lock in some here. You could see I was giving my commentary there. And then from there, guys, we went into the 15-minute orb. And then we also had some Fibonacci's right here, which I'm going to show you. So there's actually a few of them. So let's go and look at the Fibonacci's now. And then I'm going to go to the 5-minute to show you guys this, okay? So I know a lot of you have questions about the fibs. So let's explain this one to you. So we have the first bar, we push down and then we push back up. All right. And then we have this little inverted hammer. So this is the morning leg. Okay. This is the morning leg right here. Let me go ahead and draw this arrow. You could see it takes about, 4 or 5 candles at least. So 15 minutes to 30 minutes, you're going to have the morning leg. The morning leg is a directional push. Literally, it means, did it go up or did it go down? And what you want to do there, guys, is you want to go ahead and take the Fibonacci and put it from the low to the high like that. Okay, that's what you want to do. And then what you want to do here, so you'll see we took a trade on the small account today, and we made $91 with MES futures contracts. And what we did here, guys, is all we did is we had to add literally an order waiting on the 618. So for you guys who ask me, like, how do you get in? How do you get in? You literally, when we have a nice directional push like this, you can put your order on the 618 and let it come to you, right? And boom, so we got filled. So right there, hit me with a 1 if you would be scared in this trade right now. You see, like, it looks red, it looks kind of scary. Hit me with a 1 if you would be scared getting filled right there. Hit me with a 2 if no. What do you guys think? Shout out to Roop, what's going on? Alicia, Trading Wars Army, good to see you. Honest question, guys. So this is how the fibs work, right? It's all predictions. It's all anticipation. And right here, we got filled on the 618. Next bar comes in, bam. Okay. So you guys, this is the power of Fibonacci, because when it's coming down, you're buying. So you get a good risk reward, as well as you get cheap option premiums. Okay. So we had that push back up. We had a nice inside bar as well. And then we went sideways for a bit. And then this was the nirvana that came. So I was pretty confident with the trade that when we got in on the 618, that when this nirvana came in, that we were going to make a new high. Okay. I was pretty confident we were going to make a new high. And you can see we touched the 618 again. So I was really confident we were going to make a new high right there. And then we pushed, bam. So there we go. So that's where we scaled out most of our position. That's what you really want to be, scaling out your position when you make a new high. If you're going long, if you're short, when you make a new low, because you always want to be selling into strength and covering your short into the flush. Okay. So here we go, guys. So we have that bam, bam, push, right? And then we go ahead here, guys. And let me just see what we had next here. So morning leg, blah, blah, smile, inside. Oh, yes. Okay. So then the next one was a really powerful one. You guys are going to like this one. So right after that, guys, we came back down and we took out the remainder of the position. So in total, we had open P&L of about $200. But because this thing came back to break even on the last part, we were only able to get $100. So what the whole point of that is there, guys, what I'm trying to show you is when you scale out, right? Sometimes when you scale out, you're going to have a position, and the rest of your position, you have to take it at break even. You have to, okay? You can't let a winner become a loser. That's a golden rule in trading. So even though we locked in a contract up here and made $90-something, the second one that we had on, we put the stop loss to break even, because we can't allow a big winner like that to come back and become a loser. Hit me with the 3 if you're following me there. Hit me with the 3 if you followed me there. So in total, we had 2 contracts. We sold one into the new high. The second one put the stop loss at break even, turned around and hit the stop, still made some money, all good. Okay. That's the right way to do it, guys. From my experience, you don't want to let that winner come back, because it is bad trading and it will lead to frustration, really. And it could lead to like over trading. Okay, guys. So don't do that. So the next one came in here. This was a beauty. Nice little inside bar here. And this was the final play that we took with the contracts. You could see right here. Inside bar plus fib bounce up to 50, was able to catch it. So this one was a big play, guys. $216 on the small account. And all you got to do with the inside bar, guys. So the inside bar is very non-subjective. It's just if it breaks the high, you go long. If it breaks the low, you go short. But the reason why this inside bar was really good is because it just broke the 618. And then you can see here, we took this short, guys, and check this out. Bam, 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 bam. Beautiful. Flush into a new low. Yeah. So now I'm going to show you guys with the options how you can really capitalize on some of these plays. Specifically, like sometimes with options, you got to pick your poison, because you also want to make sure you get a good deal. All right. So now what I'm going to show you is the whole point of this video, and it's called the previous day's range extension. Very important topic. I wrote about this extensively in all of my books, but I don't think all of you are aware of it. But generally this, guys. So you see here on 9:30, you see how we opened inside, like we opened and we didn't break the previous day's low. So we're inside of the range. So anytime you open inside of the range, one of the game plans here is to use the previous day's range as an extension to see where we can reverse. So because we broke to the downside, what you want to do is you want to take the fib. You want to take it from the high to the low of the previous day like this, and you want to extend it like that. So you're going to put it all the way out here so that you could see it. And what you're really looking for, guys, is anywhere from the 10% to the 272, right? In this zone, you can look for price action patterns to help you see a reversal coming. And this is the benefit of using the options and the Fibonacci together. So what you could do is you could either just get in right away when it touches any of these levels, because you know it could be a reversal, so you know the calls are going to be cheap. Or what you can do is wait for a pattern. So you can see when we came down here, guys, we pushed down right there. And then look at this. As soon as we touched the 272, we made an outside bar, right? So remember, when you're down here, if you're playing for a reversal, what you want to do is you want to take the break above the bar. So you see, we don't break above this inside bar. So you don't take this one. We break above this outside right here. Watch. Bam. Okay. We push, and man, the calls on this. So I ended up taking this on Starbucks, which I'll show you in a second. I didn't take it on SPY, but there we go, guys. We had a beautiful pop from here. These ones went up, I think 300%. Very, very clean. So that's how you could use the fibs combined with the candlestick patterns to give you a nice little edge when you're looking for those big reversal plays. And something that I've noticed a lot, guys, based on my testing, is that Fridays and Mondays have a lot of reversals. So if you want to just focus on 2 days of the week for reversals, I would kind of stay to Monday and Friday. And that's just something that I'm testing and working on right there, guys. And one more thing that I wanted to point out, because somebody emailed me about this, one of my students, and one of the persons in the room. And this holy grail right here, guys, right here at 12:30, this was a big time runner. And as you can see, we only had one holy grail on the chart for the day. And these advanced patterns are like the Nirvana, which is blue, and then the holy grail, which is yellow. Those are advanced because they're 2-bar patterns. Okay, those 2-bar pattern, guys, are very powerful, right? Even this one right here, this Nirvana, okay, depending on which side you wanted to play it, if you played the upside, that's a loser. But if you play the downside, guys, that's a big winner. Okay, so remember what I said, right? If you want to stack the Fibonacci, so I talked about this yesterday. If you want to stack the Fibonacci, combine it with the candlestick pattern, you can have an edge. All right, so hit me with a 4 if you guys followed me there so far. Hit me with a 4. So to summarize, you can use the previous day's range extension and then use those levels 0.1, 169, 272. Look for the candlestick setups and then take those with a very small risk, because you risk a bar, and go for the reversals. Okay. Any advice on how to get in and out fast? By the time I press all buttons. So you can definitely have hotkeys. That's something you could look into. But really, from my experience, the more you trade, the more it becomes like just riding a bike. So you're probably a little bit new to trading. So just give yourself some time and maybe go to a higher time frame. Go to like the 15 minutes or 30 minutes or something like that, so you can take your time and put the orders in. And then eventually you're gonna get better and better at that. So that's SPY recap there, guys. Beautiful. A lot of opportunity today. There should not be, it was really clean. Like I don't see, how it could have been a really, really bad day for anybody. There was reversals, there was pushes, and there was fractals. So really, really nice. The next one I want to talk about is Starbucks. So the strategy that I just told you guys, I used it on Starbucks today. And I'm going to show you right now how I did it. It wasn't as clean as SPY, but I still made money. So that's all that matters, right? So you'll see here in the midday options power play room, I started off today before the midday. I said, here, guys, at 10 o'clock, Starbucks looking nice here with the dip buy opportunity. I'm going to try it. 95 calls, full risk. So what I did here, guys, is I took the Fibonacci. You see, again, we open here, and you see this wick. It comes back into the range of the previous day. It comes back in, and we start pushing down aggressively. So when that started happening, I'm looking for a reversal spot. So I just did the same thing. I took the Fibonacci from the previous day's high to low, and I expanded it out. Okay. So right around here, around 10 o'clock, 10:05, I saw that we went right through the 272. Okay. We went right through the 272 off the bat. I didn't see anything there. So I said, okay, I'm going to pass on that. And we came to the 50, we put in this Nirvana, but it went to the downside. So I was like, okay, I'm not interested in that either, because I'm looking for the reversal. So right here, guys, when we tagged the 618 1, 2, 3 times, so right here on this red bar right here, when we tagged it and then we started pushing back up here with this wick, I took the calls. So I got the 95 calls around 39 cents, I think, or 40 cents. And I sold back up on this push. The majority of my position got from 40 to about 59 or 58. And I covered a partial there and then rolled over and took me out on the rest. And that's okay because it had a lot more potential here. It unfortunately turned back, but that's what I mean by looking for those reversals. So I got a good deal because I was buying the calls when it was down. You know, if you were a fully aggressive person, you would have made over 25%. You could have just sold everything. But I was looking for a bigger play, but I still made something. So I'm happy with that at the end of the day. All right, so hit me with a 9 if you guys followed me there. So that's the same thing, the projection, right? You're using this as a projection. And you know what the funniest thing is, guys? If you really look at this projection in detail, so if I just scroll it down like this, the full range of yesterday was about let's say $2. And if I copy that range and I paste it down here, that's exactly where we reverse today, another $2. Do you see that, guys? So that is what we call symmetry and Fibonacci in the market. So this is not a coincidence, guys. The range of $2 is something that's programmed into these algorithms. So for example, when they're shorting, they're looking to basically match the previous range of the previous day. So if the range was $2, they took a full extension here, right? So if I, if I could have, like, obviously in hindsight, I should have done this, but I didn't. I should have taken this Nirvana or this Holy Grail back at the 1 extension. And down here, the 95 calls were, I think they were going for like 20 cents and they went back up to 40. So I could have doubled up there, but obviously I'm not perfect. So, but I hope that part of the education, you guys can go ahead and apply that. Hit me with a 10 if you understand what I'm saying about symmetry. Hit me with a 10. Everything is percentage based, guys. Remember, if you have a robot, an algorithm that's trading, you need to program it with numbers. It's not based on emotions, it's based on numbers. So something like calculating the previous day's range. Okay, $2, we stack a $2 extension here. And this is where the bull can come in, because the bull is thinking to itself, okay, if the range of yesterday was $2 and we move $2 again, this could be a great reversal. And everything is all about risk to reward at the end of the day, guys. You don't need to be 100% accurate in trading to make money. With the 2-to-1 risk to reward, you only need to win 34 out of 100 trades. And you're going to have to write that down on a piece of paper, or you're going to have to get a tattoo, or you're going to have to, I don't know, you're going to have to put it on your bathroom mirror when you wake up in the morning. 34 out of 100. That is the number that is ingrained that in your head. 34 out of 100. That's our goal. If we can do 34 out of 100, guys, we will make money. It is not that difficult. It's not. What's difficult is being consistent. It's honoring your plan and not over trading and not oversizing. That is the most difficult part in this game. Everything else is strictly mathematical. Okay? So Starbucks. Rich, is your Fib book PDF or hard copy? PDF, brother. PDF. You can print it out. And then I have 2 more trades here. Let me pull it up here. I think Apple. So Apple, guys, was a nice, solid, fat winner for me. $600. And I'm going to show you how I did that. So this one was a trigger. I'm going to do Apple. And then after Apple, guys, I'm going to wrap it up here because I'm a little bit tired from all week trading. And tomorrow we're going to do another stream, and I'm going to do more on the swing. So let me show you Apple, and then we'll go from there. Okay. So Apple, guys, this is what we call a gap fill rejection trade. And I'm going to show you something very important. It's going to be really, really crazy. I'm going to show you something very important. Okay. So what if I take the previous day's range here and I extend it again? If I take it from the high here to the low, isn't that crazy? Look at this. 272 twice. Double bottom, once, twice, gone. Very powerful, man. Even if you can get a scalp off that level, guys, it's amazing. Very, very powerful, guys. I'm happy to share that with you, man. It makes me happy to teach these things because I don't think a lot of people know about this. So here we go. So here was the trading plan that I posted last night. So my Apple plan here, guys, was short 172.53, target 171.42, stop 173.69. So I'm going to go ahead here. And I'm just going to draw it up. So it was short at 172.53, I think it was. 172.53. Oh, 83. No, 53. Stop 173.69, and the target was 171.42. Okay, so let me walk you through this trade, and I'll explain to you like how it happens in real time. So here we go. We're on the 5. First bar comes in, we gap down. So my entry is up here. So in order for me to get short, Apple needs to come back and touch this point. If it doesn't touch this point, I'm not going to be short. And the reason is I want a good deal. Okay. I want a good deal. So Angie, the only broker that I use is Interactive Brokers. I'm not sponsored by them or anything like that. It's just one that I've been using for a long time. And that I know other traders use as well. So here we go. So we gap down. So I want a good deal. I'm going to wait for it to come to the gap fill. So it pushes down. Bam. We fill right here, guys. Boom, boom. Okay. Take a little bit of heat on the trade. And then there we go. Roll over, hit the target. So that was it. So that's $600 for me there, right there, guys. Right. And you could see on the broker that I sold at $171. So 171 is right. Why is it 171? Oh, okay. Yes. So I moved it down to 171 because of this Fibonacci. Let me see. Yeah, there we go. So I wanted it right around this 90% over here. That's where I was able to get it at. So I actually made more than I expected there. So we had that push over there, bam. So there we go. So there's a target being hit. And then like I say here, guys, we rolled over to the 272, which was right around here. And then we made that double bottom. And then from there, bam, beautiful. So that's how you do a trigger. And if it gaps down, so people ask me this all the time, like if it gaps above or below your trigger, what do you do? So this is what I do. It's called a retest. So you let it come back to the trigger and hit it. Okay. So you let it go and come back in. So it comes to you. That's what we call a retest trigger. Okay. So there we go, guys. Pretty clean. What else? There was a butterfly on Peloton that I missed, and I really regret it because here we go. Let me draw this butterfly for you. So we had the butterfly here, 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 and the completion down there. Okay, right around here, and then we had that pop up there. So I was looking to play this butterfly here, guys, and I had it all there, and I was just like, should I pull the trigger? Should I pull the trigger? And I didn't. And I guess it's because I'm still testing this one. But you can see here, guys, using this fib from the low to the high right here. We hugged the 618 pretty much 1, 2, 3 times. We push a little bit and we push back up, and that's the butterfly. So the butterfly right there, you push down and you notice we went vertically back up. So this shows strong signs of bulls in the market, right? Because we couldn't even get a retracement for the bear to push back down. So from there, you draw the fib from the low to the high because you know the bear is dead in the water. And then you go here. Usually on the 618 is where you want to enter, and you could put a stop loss at the low of the day for protection. Okay. Anything else that I need to talk about? Whew. I think that's it, guys. It's tough doing these videos every single day, but I know that people learn stuff, so I try my best to make sure I don't miss a day. If I do miss a day, you guys know that I'm like really burnt out. But we take a lot of trades during the day, man. It's a lot. So I have myself and my brother taking trades, doing call outs in the rooms. It's definitely a really long process. But by Friday, I just want to pull out some Hennessy, just like you guys. Pull out some of that Hennessy and just relax. All right. So there we go, guys. I'm good here. I hope you learned something about the Fibonacci extension. And I'm going to tell you guys something if you're interested. You can go ahead and write this down. But this is a great strategy for you to look into. So Mondays and Fridays, okay, Monday and Friday, play the Fibonacci reversals, okay? Play the Fibonacci reversals on Monday and Friday. And you could do SPY 0 days to expiry. And try that out, guys, and tell me what you think about that, okay? I'm going to end the broadcast here. Don't forget, we're going to be doing our stream tomorrow and Sunday. On Sunday, we do giveaways. So you'll have a chance to win a giveaway if you comment. So please go ahead and comment. And let me know what you think about that reversal strategy. And I think it's a very effective strategy. And I think if you focus on Mondays and Fridays, I think there's a good edge there, and I'm going to continue to test that and let you guys know how that goes. All right. So thank you very much for your time. I appreciate you guys. Enjoy your weekend, and I'll see you tomorrow, and I'll see you on Sunday, and I'll see you on Monday, Tuesday, Wednesday, Thursday, Friday, because that's how we get it done. Okay. Before we go, let's go ahead and shout out to this new member here, Sal Star. Welcome to the Trading Wars Army. Can we please welcome Sal Star with the Trading Wars Army Spy and VIP? Show some love. That's a great way to end the stream tonight. Okay. So I'll catch you tomorrow, guys. Don't forget to comment. You get a chance to win a giveaway, and I'll see you tomorrow. Take care.